No, absolutely. And, we've got a fairly constructive view on oil for the remainder of this year. We've got an average price, should we say, of $60 to $65 a barrel and $70 to $75 between WTI and Brent for this year. So, we're looking for some incremental sort of upside to the oil price. Nothing too extreme. I think if we went any higher than that, and if we were to move back up to, say, the $80, $90, $100 barrel range that, some people had forecast previously, then the market would be probably looking for more of a correction going forward. But some modest upside, which again sort of helps to underscore and underpin the strong fundamental outlook that we have for the, for the GCC oil producing region for the time being.
What's the best way to trade the oil story right now? Is it through owning the physical commodity, or do you look at potentially trading on some of those oil majors, and from which part of the world would you look at?
Well, I mean, that's as a macro strategist, I look at oil in the context of sort of the global picture, and I think a stabilising sort of macro backdrop with the Fed having pulled back from its tightening cycle, and we'll hear later on this week as to how much more they may go between now and the end of the year, and with the ECB having sort of tailed back its tightening expectations and much more of a dovish slant, that supports sort of the underlying fundamental macro growth story, which again will help to promote and support oil products and oil prices going forward. So for me, it's more of a sort of a global trade view rather than sort of any specific sort of physical or otherwise trade recommendations.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.